Have you ever wondered what happens to your money sitting in the bank? That's a question many of us don't often ask ourselves. We deposit our hard-earned cash, watch the numbers in our account grow, and feel a sense of security. We believe our money is safe, protected, tucked away in this digital vault we call a bank account. But is it really? You see, the concept of a bank balance is pretty simple. You deposit money and it stays there until you need it, right? It's a comfort zone, a warm, cozy place where our money can rest easy. And why wouldn't it be? After all, it's better than hiding it under the mattress. But here's a thought. What if the safety and security of your bank balance is somewhat of an illusion? What if there's a hidden truth that we often overlook? Enter the world of inflation. Now, don't let the term intimidate you. It's just a fancy word economists use to describe the gradual increase in the price of goods and services over time. You've probably noticed how a cup of coffee or a candy bar costs more than they did 5 years ago. That's inflation in action. But what does this have to do with your bank balance? Well, while your money is resting easy in your account, inflation is quietly and steadily eroding its value. You see, if the rate of inflation is higher than the interest your bank is giving you, your money is effectively losing its purchasing power. So, while you may have more money in your account over time due to interest, the actual value of that money, what you can buy with it, is gradually decreasing. It's a silent process, happening right under your nose. But what if your money in the bank is not as safe as you think? That's the question we need to ponder. And as we delve deeper, we'll uncover the silent thief that's slowly but surely eating away at your bank balance. But don't worry, there's a way to fight back. Stay tuned. Inflation, a term you often hear but might not fully understand, is actually a silent thief. Let's break it down in simple terms. Imagine inflation as a sneaky character that, bit by bit, chips away at the value of your money. It's like a magician who makes things disappear, except in this case, what's vanishing is the purchasing power of your hard-earned cash. You see, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. It's measured as an annual percentage increase. For instance, if we have an inflation rate of 2%, that means the cost of the goods and services we buy has increased by 2% over the year. Now let's put this into perspective with an example. Picture this, let's say 20 years ago you could buy a nice hot cup of coffee for just $1. Today that same cup of coffee might cost you $3. That's inflation in action. The coffee hasn't changed, but the amount of money you need to buy it has. This silent thief doesn't just stop at your coffee. It affects everything from your groceries to your rent. Over time, the silent thief of inflation erodes the value of money sitting idle in your bank account. Consider this. If you have $100 in your bank today, and inflation is at 2% next year, you'll still have $100 in your bank. But here's the catch. The purchasing power of that $100 will be just $98. The year after, even less. So your bank balance might look the same, but what you can buy with it is decreasing every year. And this is why inflation is often referred to as the silent thief. It quietly, slowly, but surely, reduces the value of your money. It's an invisible force that's constantly at work, and it's one of the biggest threats to your savings. So, if your money is just sitting in the bank, it's not growing but shrinking in value. So, how can you protect your money from this silent enemy? The answer is investing. Investing. It's a word that's often thrown around, but what does it really mean? At its core, investing is about putting your money to work. Instead of letting your cash sit idle in a bank, you're putting it into assets that have the potential to grow in value. These could be stocks, bonds, real estate, or even a startup business. Now, you might be thinking, sure, but isn't investing risky? Yes, there's a level of risk involved, but here's the thing. Not investing is also a risk. Why? Remember our silent enemy, inflation? If your money is just sitting in your bank account, it's losing value every year due to inflation. But when you invest, you're giving your money a fighting chance. You're not only keeping up with inflation, but you're also creating the potential to outpace it. This means you're not just maintaining your wealth, but you're growing it. Consider this. If you put $100 in a bank account today, and the inflation rate is 2% per year in 10 years, that $100 will have the buying power of about $82. But if you invest that $100 and earn a return of 6% per year, in 10 years, you'll have nearly $200. See the difference? The power of investing lies in its ability to turn your money into more money. It's like planting a seed and watching it grow into a tree. Sure, it takes time and patience, but the fruit it bears can be life-changing. It's also important to note that investing doesn't require a large sum of money. You can start small and gradually increase your investments as you become more comfortable and knowledgeable. Investing isn't about getting rich quick. It's about securing your financial future and ensuring that your money is working for you. Remember, the best time to start investing was yesterday. The next best time is now. Investing is not a luxury, it's a necessity if you want to protect and grow your wealth. We know what you're thinking, investing sounds risky, right? It's a common fear that holds many back from taking that first step into the world of investing. But here's the thing. While investing does involve some risk, it's not necessarily the boogeyman it's often made out to be. Let's break it down. One common fear is the risk of losing the money you put in. Yes, the value of investments can go up and down, and yes, there is a potential for loss. However, the beauty of investing is that it's not all or nothing. You don't put your entire life savings into one company's stock and hope for the best. That's not investing, that's gambling. Instead, smart investors diversify their investments. This means spreading your money across different types of investments: stocks, bonds, real estate, and more. It's like not putting all your eggs in one basket. If one investment doesn't perform as expected, the others can help balance out the loss. Another fear is the complexity of investing. It can seem like a mysterious world of graphs, numbers, and jargon. But here's a little secret: you don't have to be a Wall Street whiz to start investing. There are plenty of resources and tools available to help beginners navigate the investment landscape. And remember, every expert was once a beginner. Finally, let's talk about the fear of the unknown. What if the market crashes? What if there's a recession? While these events can impact investments, it's important to remember that historically, markets have recovered and grown over the long term. Investing is a long game, and patience often pays off. So, investing is not as scary as it seems, especially when compared to the guaranteed loss of buying power due to inflation. Investing is about growing your money, beating inflation, and securing your financial future. And with knowledge, diversification, and a bit of patience, those fears can be managed. After all, the biggest risk is not taking any risk at all. Your money is not just numbers on a screen, it's your future. Let's take a moment to really grasp that. What we're talking about here is more than just financial stability. It's about shaping the life you want to live. It's about the freedom to make choices, to take opportunities, to build and to grow. It's about your dreams, your aspirations, and your legacy. Imagine for a moment the life you want 10, 20, 30 years down the line. Perhaps you see yourself in a cozy home of your own, maybe in a bustling city or a quiet countryside. Maybe you envision traveling the world, tasting exotic cuisines and experiencing different cultures. Or perhaps you dream of a peaceful, comfortable retirement, where you can pursue your hobbies and spend quality time with your loved ones. Now imagine that future slipping away, bit by bit, because you chose to let your money sit idle in your bank account, losing its value year after year due to inflation. It's a disheartening picture, isn't it? But the good news is it doesn't have to be this way. By investing your money, you're actively working towards securing that dream life. Whether it's stocks, bonds, real estate, or even starting your own business, your investments can grow and compound over time, providing you with a steady stream of income that can support your future goals. Think about it like planting a tree. Initially, it might seem like a lot of work, but as time goes on, that tree grows, blossoms, and bears fruit. It becomes a source of shade on a hot day, a place for birds to nest, a beautiful addition to your landscape. That's what your investment can be. A source of comfort, security, and beauty in your life. So don't wait. Start now. Begin with small steps if you must, but begin. Educate yourself, seek advice, make informed decisions. And remember, every dollar you invest is a step towards your desired future. Don't let inflation eat away your future. Take control, start investing.